I've probably done every single job at a company except for being an engineer. That is the one job that I haven't done. I've done marketing, I've done product, I've done finance, I've done
everything.
almost everything, including being janitor.
Mood. Same. Hey friends, welcome to Smart Venture Podcast, the best information for future CEOs. Starting a company is easy, but growing and managing it is hard. In this podcast, we sit down with the best founders, experienced leaders, and investors in tech and relevant space to give you the best tips to grow your company and grow yourself. Some of our most popular episodes are about crypto founders and investors. Check out our new podcast called Keeping Up with Crypto on YouTube, iTunes, and Spotify. If you like it, don't forget to subscribe and give it a 5-star. This episode is brought to you by Momento NFT. Momento NFT is a direct-to-fan social NFT app that allows fans to own viral moments from their favorite creators and unlock perks like meet and greets, autographed merchandise, and more. As a creator, you can easily create valuable images and video NFTs of your best social content. And as a fan, you can own viral moments from your favorite creators and unlock perks like meet and greets. Momento NFT is backed by Animoca brand, Adenza and Mark Pincus. Check out the app available on App Store and Google Play. Hi, Kevin. Thank you so much for coming on the show for the second time today.
Oh, thanks for having me. Excited to be here.
Yeah. So to start the show, I would love to learn a little bit more about how you get started and then how you come from, your parents were immigrants. And then to when I was listening to your other podcasts, you were literally like the Board of Trustees of Berkeley, which was where you went to school. And then you came from that person who got scholarship to the end of the day, donating back to the school, which was really inspiring. And I would love to learn from a little bit more of your personal journey on what shaped you into who you are today.
Yeah, well, I very much think of myself as coming from an immigrant mentality. My parents immigrated to the United States right before I was born, a little bit less than a year before I was born. And I grew up speaking Chinese, and English became my second language. And we had very little because my parents fled China kind of in the late 1940s, with the Civil War in China. And so we came to the US with really very little, growing up in a small town in the US. For some reason, I really wanted to go to a big school. And then when I went to the big school, I felt like, I'm just fascinated with business and finance. And really my time at Berkeley was really formative in terms of shaping me into learning about what Silicon Valley was, learning about what entrepreneurship was, and then led me to become a VC, and eventually start my own company.
I was wondering, where does the drive come from?
That is a great question. My family asks me that all the time. My family, certainly it took a lot of drive and ambition for I think any immigrant to leave their home country and then go to a different place. But I think because my parents had such a tough childhood, they really just wanted a very simple life for me. They wanted they said, hey, just go get a steady job and, whether it's finance or be a doctor or be a lawyer, something, fairly traditional. They didn't really put pressure on me to really do, much of anything in terms of really driving me really hard. It's kind of the opposite of a tiger, parent.
Same
mentality.
Yeah,
I think they just wanted me to be happy and play with friends. But for some reason, I think that drive came very internal, feeling like, I had very little growing up and I really wanted a little bit more financial security, which led me to investigate things that, potentially could lead to a good, paying career. And then as I started thinking about that, I really became fascinated with actually going out on the risk spectrum and really, trying to start, a new company, which is of course incredibly risky, but knowing that, both from a financial standpoint in terms of potential payoff, as well as the ability to learn, the ability to try new things and really stretch myself creatively, all of that became really apparent to me as I investigated more about this whole Silicon Valley, technology trend.
Yeah, totally. Did you grow up in Silicon Valley? Was it always in the background, like entrepreneurship and stuff? Or is this like you adapted later on? And then also like you're super successful, so like billion-dollar companies. Curious, like who do you consult when it comes to career advice? We hear investors all come from like really interesting like backgrounds with, people they know or like went to a good school or like, have family member who are like in the industry and, coming from, as you mentioned, like immigrant family and like, VC was like really, really new at that point. I wouldn't say new, but it was like, I bet it was really competitive to get in. Like, how do you plan this career for yourself?
Well, I don't think my career was very standard. In terms of my career progression, I was drawn to math and science. And so, but not, so much into the fundamental science, part of it. And so as I was thinking about, career and different options, like, to be honest, when I was at Berkeley and researching what are some of the higher paying jobs, coming out of undergraduate, it led me to finance. I said, okay, well, I like numbers, and I actually was just fascinated by learning about the stock market and understanding kind of basic financial theory. And then, so I thought, okay, well, I'm going to go. I want to try to get a job in investment banking, which of course is 20 years ago is very competitive. And so I landed the only job coming out of Berkeley at my investment bank called Deutsche Bank in the technology department. And so I went to go work at Deutsche Bank's tech M&A practice in San Francisco. And then that really just kind of opened my eyes more to the startup industry and companies trying to go public, which we were constantly meeting with. And that eventually led me down into a career of becoming a venture capitalist. And then I thought, I really want to continue going out on the risk spectrum and starting my own company to try. And so I did that when I was 26.
I'm curious, like so many people say, oh, I'm going to leave VC and start a company. Like I would say 90% people never did that. Like they just stayed there. And like I would say like the 10% people who did that, like I've never heard of someone with like this level of success. Well, maybe it's because of like I only know my peers who are still working on something like in their 20s, early 30s or something. But my thought is it's really hard to start a company, especially feel like it's impossible to raise money. Like after work there for a year, I feel like I'm definitely like convinced that like there's no way I can like raise any funding based on how hard it is, like observing how many smart people come to like a venture capitalist to like, raise funding. And then there's no way like I can sell myself this hard to get nothing and then be like going after it again to tomorrow. It was like impossible. I'm curious, like what did you do in your venture years that teach you how to be a better entrepreneur?
Yeah, well, first I want to potentially contradict a little bit of some of the assumptions that you laid out. So I think on the one hand, raising money can be incredibly hard, but on the other hand, raising money can be actually reasonably simple and straightforward. It really, market dynamics are incredibly important. One of the things I noticed when I was an investor, both as a investment bank but also as a VC, I noticed that there were just these really interesting both micro and macro trends. As those things became apparent to a broader marketplace, there's so much demand for investors to invest in that in a particular type of trend or idea. So I would say 2 years ago, with all of the electric car companies going IPO, whether it was Rivian or Lucid or a number of others in Asia, it was just sort of investors could not get enough of electric car companies. So if you were in this sort of in the right position of having started an electric car company that had some unique technology or an approach or whatever it was, like frankly, everyone got financed. And I also noticed back in 2006 era, there's something that we call Web 2, which is kind of a precursor to Web 3 now. And anybody starting a Web 2 company, those sort of investors lined up to try to finance them. And so I kind of noticed that these things were, yes, there was this 25-year-old with very little experience, but a good, an interesting Web 2 idea, and they were raising a ton of money. And then there was, semiconductor companies. If you were a semiconductor company, no matter how smart you were, your PhD from MIT, whatever it was, you just couldn't raise money in 2005, 2006, for your company. And it's very cyclical. Now semiconductors are hot again. And so if you're doing something interesting in the semiconductor field, you're gonna get financed. So I think part of it as an entrepreneur is understanding what's happening in the capital markets. What are the things that investors are excited about? And not to say that should be your only way to pick what kind of company you want to start, but it is something to be aware of as an entrepreneur, that there are these market trends that are much, much greater than what you're personally able to control. And if you're positioned in that market at the right time, financing can actually be relatively easy and straightforward. And so back when I started Kabam, it was really this age of Web 2, is the beginnings of what was called cloud computing. And so there was actually some interest to invest in things that were, for example, gaming, and using some of the new cloud technologies to create a game and put it in the internet, as opposed to shipping it on a DVD. And so there was it wasn't the hottest market, but it was something that was able to get financed. And we were lucky to, raise some money, even when the markets were not that hot around gaming.
Totally. I mean, I listened to your talks. I think you're super articulate. My curiosity is like, how do you position yourself to be that startup that like every VC is chasing from? Because I kind of feel like in the investing space, at least just I can only speak on my personal experience, was there's about say 5 companies that like every VC is like chasing after them. And then there's like 95 companies that are like chasing after VCs. So how do you be that like 5 companies that are letting people chase you?
Well, I've been on both sides of that, and frankly, as most entrepreneurs who've been around for many years, mostly chasing VCs, and in a few circumstances, lucky enough to have some VCs chase me. First of all, it's a little bit, I like to use surfing analogies, although it's not that many people know how to surf. But if you generally think about surfing, getting into the right position before the wave comes is incredibly important. If you're sort of, in the wrong position and either too early or too late, and you're trying to catch the wave, it's very, very difficult. And frankly, the wave, just kind of passes you by. But if you get into the right position, which requires a little bit of foresight and identifying, big trends that are coming in, getting into the right position really gives you the best opportunity to be in a marketplace that VCs want to fund. But if you're, of course, I'll just take the NFT trend in the last, 18 months. If you're sort of identified that wave coming in relatively early and then got out in front of it, you were able to raise, a lot of NFT projects were funded in the last 18 months. But if you're just getting started, 6 months ago, it became very difficult to really get that funding. So there's really kind of these very small windows that kind of open up. When they're open, a lot of investors want to pile in. It takes a little bit of luck. It takes a little bit of skill and experience to identify the right, waves and get into the right position before the whole market catches on.
Totally. Speaking of investing, now we recently started like a venture studio, and now you're assuming you're probably investing a lot of companies yourself. Like, how do you look for these companies aside of the giant wave, or you're just also surfing on the wave? Like you're also one of the investors who are looking at these companies, like, on the trend side.
So SuperLayer is what we call a venture studio. And a venture studio is one part venture fund and another part incubator. And so it really takes a couple of the things that have been in my background, both finance as well as being an entrepreneur, and kind of puts them together. And so at SuperLayer, we don't just invest in entrepreneurs that pitch us. We generally are trying to find problems that we're intimate with, go find a co-founder that we want to go build a solution to that problem. And so we don't try to invest in everything, or we don't try to start companies in generalized spaces. What we try to do is get familiar with a very particular problem. First of all, we start with Web3 as the general umbrella by which we're really focused on, from a technology standpoint, becoming smarter and smarter about Web3 trends. We generally try to stay a little bit more consumer facing in terms of the types of products. And obviously that's because of my gaming background. It's some of my partners who come from Facebook or who come from Google or some other consumer facing companies. And then we try to understand some of the challenges that are facing Web3 right now. So maybe that's identity, or maybe that's wallet, based messaging. And then we try to go, find a great co-founder or set of co-founders to build a company with. And then our fund allows us to do is just really put in the pre-seed funding into a company and go from idea and concept, putting together a team, to a product and market before we need to raise some more money. So it's a fun model that's relatively, recent. Back when I was a VC, this idea of a venture studio didn't really exist. And now there's, I think it is one of the more interesting trends within the overall venture space is putting together not just capital, but also experience and operating experience to build new companies pretty quickly in a very specific domain. And so I'm pretty excited about doing that at SuperLayer.
Totally. When it comes to figure out like what type of companies to fund, what is the difference between in the past on the venture investing to, right now we're in an economic downturn. I'm curious, like, what is your approach in this time? And like, what exactly are something that you find interesting during this time?
Yeah, we talked a little about market timing and trends being incredibly important. And then the other, general factor that we're facing in mid 2022 is sort of a, whether you want to call it a recessionary environment or it's definitely a bear market, both in terms of crypto capital markets as well as traditional capital markets. So I think the first and foremost, it's conserve cash, extend runway. Generally investors in bad markets they want to sit on the sidelines. There's no impetus to act. Everyone's concerned about their public portfolios or their late stage, companies and whether or not those things are going to materialize. And so there's, generally a lot of investors are just, they're triaging, they're dealing with existing portfolios. They're trying to understand what's happening from a macro standpoint. And in that type of environment, it is it is 10x, more than 10x harder to get financed, as a company. And so it is, just less entrepreneur friendly when you're in an environment like this. And so as an entrepreneur, the things that are in our control is to conserve cash, dramatically slow down hiring or any other major expenses that a business may have, and just try to, put one foot in front of the other and make progress, but do it in a much slower way. And then in a bull market, as we were in, 6 to 12 months ago, you literally couldn't go fast enough. You couldn't hire fast enough. You couldn't spend the marketing dollars fast enough. You couldn't, generate PR and buzz fast enough to do those things. And it's just, recognizing that these are incredibly different markets and that generating even some PR and buzz in a bear market, it just doesn't help as much for businesses. And so it is more important to just make progress, build products, serve customers. I think that's conserve cash, make sure you can get through this tough market environment. And the good news is for the entrepreneurs and companies that make it through this environment, there's so much less companies coming out of one of these downturns that on the other side, hopefully we all get a little bit lucky as entrepreneurs that you're just, again, in the right position in the right market trends. And then hopefully you find yourself in a position where VCs are throwing money at you, which is, exactly what happened to me at Kabam. So in 2008, 2007, 2008, it was really tough building Kabam. Coming out of it in 2009, when the economy started to, the stock markets and general economy started to come back, there were so few gaming companies that really made it through that down period. 2009, 2010, there's investors just throwing money at gaming companies that had real traction. So again, I've been on both sides of these things. It's just market timing and just making sure that the strategies and tactics that we're doing as entrepreneurs are right for the market environment.
Yeah, totally. So speaking of Kabam, you've done so many incredible things in there within the 10 years that you were running the company or starting the company. So at the beginning, you started the company yourself, and then like 10 years later, you guys grew it into a really profitable business. The company was acquired for nearly like $1 billion. And then you grew from like yourself to over 1,000 people. So throughout these years, how many phases have you went through? And what was your journey like running a company from the beginning stage of, I don't know if you were in a garage, but like, from a one person thing to like, a legit company sold for or almost like $1 billion?
Well, I felt like we went through different markets. The gaming markets have gone up and down a lot. For those of you that are a little bit older, you might remember Zynga's IPO and then King's IPO. And then there was a long period where things weren't that great. And then Roblox, went IPO, or Unity went IPO, and then a lot more interest came back into gaming. So gaming markets have gone up and down quite a bit. When we first started, when we were, maybe 20 people or so, we had rented a small office above a dim sum restaurant. And that was, back then it was, I don't know, I think it was $1.50 or something like that a square foot, which was just one of the cheapest, office spaces we could find. And so we rented a small little thing that we paid, I don't know, something like $5,000 a month, for, and we crammed 20 people into that office. Then as we grew the business and received some major funding, we then expanded into, I think we had, at our height, our San Francisco office was about 80,000 square feet, in a premium downtown location. I think we're paying, I don't know, $7 or $8 a square foot. I mean, it was just very different times. And of course, back, at that point, we're incredibly profitable. So I think, actually, but looking back at all that, the fancy office and all the amenities, actually, after I sold Kabam, I spent 6 months taking some time off to recharge. I really look most fondly, actually, at that, small dim sum, office that we had, because it was 20 people. We all knew each other. We all had a good time. And it was really, didn't have to deal with politics, didn't have to deal with what did I say? How did somebody interpret that? I think at heart, I realized I just love building things with small teams that are equally passionate. And it's just easier to find really passionate group of people when you're first starting out, because, frankly, there's no reason to join a small startup when it's just first starting. It's incredibly sort of risky. There's no brand. You can't tell your mom that, oh, I'm going to go work for, such and such hot company that you might have heard of. Your mom is much more likely to be like, why would you go work there? So that's the type of people that I just, really feel a connection with and just always enjoy building new companies with.
Totally. So when you started, did you started finding a team first, or did you kind of like have a product first? How do you get the ball rolling? How do you put together a team and make them like want to work for you?
Putting together teams are very hard. It is very hard. I think over time, I recognize a few things. One is that I think I am lucky that now that I've been an entrepreneur for 15 years, I've worked with 1,000 plus people in my career as an entrepreneur. So there's certainly some subset of those people that I've just really enjoyed working with, and I think have enjoyed working with me. And so, when I first started Forte and then started Rally and SuperLayer, I always had a few people that I said, you know what, that person would be really great to work with again. And I would call them up, and not everyone says yes, but I think enough people say yes that I feel like I'm able to put together a great team to start with. And over time, I always realize that, in what I do, there's a few things that I always need. I always need a great engineer, a great technical partner / engineer. I need great product, thinking, generally building more consumer facing things. Having great product people is so important. And so I'm able to really put those types of teams together, and I think, I just take the time to really try to treat people right, really understand what somebody cares about. One of the things I learned over a long time is that not everyone wants the same thing. And so some people really enjoy just feeling like there's a close camaraderie and relationship that you have with them. Other people want, praise and recognition, and ideally publicly. There's some people actually who don't like the public recognition, and but they really want the private recognition that they're doing a good job. And of course, there's other people that they need money, they need the compensation as one of their primary things. But I think just trying to understand kind of different people, what they care about, what are the different skill sets that they bring, what are the different working styles and relationship. But everyone wants to feel like they're valued. Everyone wants to feel like they're joining something with a purpose. And so I think, setting a purpose, making people feel like they're valued, treating people like equals is just a few of the core principles that I have for building teams. And then doing it long enough, build certain types of relationships that then form a core team I've been able to build at various different companies.
Totally. When you are building these 3 companies, and then now even your like venture studio venture fund, I'm curious, what do you see as the core role of yours? Like, how do you identify yourself as a founder? What's your like unfair advantage? Or like, say, what is like one skill that you're constantly trying to get better at?
Well, one skill I'm constantly trying to get better at is making people feel really special. I'm an introvert by nature. So it takes a little bit of energy for me to have conversations with people. And it's not natural for me, given how I grew up in an immigrant family to have constantly be praised, to understand that how I can constantly praise other people and make them feel really special. I think that's the one thing that I really think a lot about is how do I constantly make other people feel really special, that their contributions, their hard work is being recognized. I think that's such a important skill set for any founder that's trying to build great teams is just to understand that specific skill set. So I still work on that. It's kind of probably my the one thing I really work at. The thing that I think is my superpower is I've always loved science fiction. I've always loved tinkering with technology, trying to build things. And I think one superpower I have is just somehow the world of technology just makes sense to me. And I sort of can see these macro trends coming and try to, build interesting companies that I think are a little bit ahead of the curve. So when I started Kabam, this idea of building a video game company on the internet, seemed a little bit crazy, but I thought it was super cool. And I thought, 10 years from now, this is how the majority of games will be built and played. And then I thought Web3 and blockchain technology would also, similarly, be a decade-long trend. And so I've been lucky to have a few of these mega trends that I've fallen in love with as a builder, and then try to build interesting companies in those spaces. I think that's been part of just partly being lucky, but part of just having this awareness, but passion to go build something, to build a startup in a space that I find personally exciting.
Totally. I'm curious, do you identify yourself as like a marketing person, a salesperson, a technical person, or like a product person? What exactly are something that you personally feel like you should be doing, or like you should be that leader of that company versus like, you need to hire someone else, you need to partner with someone who are good at the other things?
I feel like now that I've started, 5 different companies, I've been involved with a few more. I've probably done every single job at a company except for being an engineer. That is the one job that I haven't done. I've done marketing, I've done product, I've done finance, I've done
everything,
almost everything, including being janitor.
Mood. Same.
And I find a lot of that stuff fun, actually. And so I think I'm naturally a generalist. I think I'm naturally very good at knowing or understanding how to learn and go figure out, a number of things. I do think of myself as a generalist. I do think of myself as, I always wondered, what is the role of being a founder or CEO, of a company? And I actually think it boils down to just 3 things very simply. The first is actually setting a direction, and that has different levels to it. So part of it is understanding what a vision is. Part of it setting a strategy for a year or quarter, a month, whatever the timeline, is that allows you to get a whole group of people working together and heading towards a specific direction. So the first thing is just picking a direction that's compelling, that you can get other people rallied around. That's job number one as a founder. Exactly. The second thing is making sure that you have a team of people with different skill sets and experiences that can go achieve the mission or the vision that you've laid out for people. So if you lay out a great mission and then you get a bunch of marketing people, but nobody to actually build or deliver the product, you can't achieve the vision that you're setting out. So the second thing is just whatever vision your strategy you're pursuing, make sure you have the right team to go and execute against that strategy. And then the third thing, to do is just to make sure you have enough money or capital to make number 1 and 2 happen. Those are kind of the 3 things that think about a role as a CEO founder of something new. Those 3 things are the 3 things that you can't really delegate to other people. And then everything else you can actually delegate.
Totally. Completely agree with you. So I see a pattern of the company that you found. Like at the beginning, it was a gaming company, and then you started NFT and gaming, and then it was creator token. And then now you're a venture studio / investing in this space. What is something that you've learned in the gaming space that most people don't know? And I've heard like many times, like the host asks you, how is the game monetize themselves? How the game ecosystem work in general? What is something that like the big picture that people are missing? And then why do you kind of like go after this market? Because I think compared to a lot of like B2B company, I think like gaming is kind of risky, right? Like unless you're Tencent, like, I mean, I personally would not spend any money in gaming because it's scary. Okay. Like this Mario Bro, I'm kind of done with games, but I am a creator. So I am trying to tokenize myself among like, while I was studying your company. So what are some insights that most people don't know?
I think there's 2 secrets to gaming. The first is progression. So everyone loves to feel like they're they're making progress at something. And so really, almost all games do this. And then you'll hear the word gamification and a few other things, and as applied to non-gaming industries. But the first key is make everyone feel like they're making progress. That you do something, you master something, you get, or not even master, but you're starting to get good at something, you understand how to do a basic thing, and then give somebody a reward. Say, hey, you've leveled up, or you've earned this badge, or you've gained this experience, or whatever it may be. So everyone loves to feel like they're making progress towards something. And so games do a great job at understanding that psychology and just giving it to the entire player base. It's partly why people get really interested in games, because it's sort of, I know how to make progress in this thing. Like, life is really messy, and I don't know my career or whatever is going in the right direction. But if I play this game, I can feel like, oh, I made progress towards something, today by playing. That's kind of just one of the core psychological things that make games, and it really can apply to non-gaming areas too. The second secret to know about gaming is that power law curves are very much in games. And what I really mean by that is that there's a small number of people who play games that spend a lot of money. And it's a weird psychology, because, as I said, as we talked about, I come from an immigrant family. So I never bought soda from a vending machine, kind of thing, because it's just, it's way more cheaper to go to a supermarket and buy the 6-pack, than go buy something from a vending machine. But there are gamers who they lack time. They also, they want status, or they want, prestige, or they want to just feel incredibly unique. And they're willing to spend tens of thousands of dollars, for certain things in a game. And to me, it's even as a game creator over a long period of time, one of the things that I got people to think a lot about at Kabam was, how do you put yourself into the shoes of somebody that's willing to spend tens of thousands of dollars in a game? And what is going to be interesting and rewarding for that person to actually spend that much money? Because people obviously make rational decisions still. That person that's willing to spend that much money in a game, you have to make them feel like they're getting value for what they're spending. And understanding that psychology is really hard, because it's, for the average person just doesn't spend $10,000 in a game. So how do you, as a game designer, put that hat on? And frankly, that's one of the things that attracted me to Web3, because if you sort of think about that crazy NFT, maybe it's the Bored Ape, or it's the, Moonbirds, or something else that you care about, or it's, if you're involved in DeFi or some other thing, everyone talks about the crypto whales, that splash around. So how do you put yourself into the mentality of somebody who's willing to spend hundreds of thousands of dollars, or put millions of dollars of collateral into a new DeFi project? That psychology is really important to understand that part of the market, as well as to understand how do you then create a product that hopefully, millions of people can use over time. So, but you still have to cater to that handful of people that are willing to spend tens of thousands or hundreds of thousands of dollars for, your project.
When you first created Forte or Rally or Kabam, were they doing what you want them to do? Or like, were they something that because of you keep iterate and then it becomes something else?
I've never been lucky enough to just build a thing and just have it, work.
Mood every day.
So, we built, I don't know, 4 or 5 products before we built our first successful product. And so every product was iterating. And, I'll say for, Rally, as well, we built many different types of products before we sort of started to find something that kind of worked. So I've always been comfortable with this idea that, you build something, that thing may not work, but the most important thing is to get a product out in the market and then learn as fast as you can, and then iterate, quickly. And I think either, some people are very lucky that they have an idea, and then that idea just works, out the gate. But, the reality is it's a very small number of entrepreneurs who have that happen to them. Most people really need to work hard. They have either minor pivots or even major pivots before they get to something that really starts to work.
How do you figure out when to pivot and when to stick with something?
Oh, it's an art, more than anything else. I think for me personally, one aspect, of it is, after trying something for a few months, so it's both kind of holding my head. How do I build something? How do I get the MVP out to market? Something that's a good enough product that I can learn. try to get that out of, I try to get that out as fast as possible. And then, generally within 2 to 3 months after, the launch of a product, if I'm honest with myself, I'll start to feel like, this product just is not achieving product market fit. And part of it is having gone through and built many different types of products. So I've sort of seen what a good product can do in the marketplace. And I've also seen many more times a product not work, in the marketplace. And so it's after 2 or 3 months, it's sort of did we actually build the MVP, or did it miss a core piece of functionality that we should have put into the MVP? Sometimes, you need another month or two to sort of build some more functionality that you might have missed, for the first version of the product. But after 3 months, if I'm sort of doing this right and have a team that's working really well, and it's just not working, it just 3 months into it, it just starts to feel like, it's time to really think about doing something different, because it's just not working.
What if the thing is kind of like mediocre performing? It's top, but it's not really the top 1%. I feel like most people kind of feel like, are we supposed to be quitting? Or like right now, we already went so far, that's like kind of working. How do you kind of like navigate that kind of situation?
Yeah, that's the sunk cost fallacy. And I think, for B2B companies, it can be harder, where you're making enough money to pay the bills, and the business is maybe sustainable in some way, but it's not really growing. It's not really on its way to being in that, I don't know, top 1%. I think that could be a little bit harder. For a lot of consumer companies, it is a little bit easier, because you're either getting a lot of great growth, and you're sort of recognizing the benefits of creating software, and you're serving a lot of different consumers all around the world, or you're not. And so most consumer companies are not really sort of sustainable from a business model standpoint in the outset. And so 3 months into a consumer product launch, it's unlikely that you're profitable. Obviously, if you're profitable, you're probably doing something really, really great, and just keep going. But if you're not profitable, and you're not getting, consumer engagement and attraction and attention in the marketplace, it probably is time to do something, different, because you're not going to be able to sustain, the burn for very long anyway. So depends on type of business, the market that the business is trying to compete in. But for consumer companies, I think it's easier to say after a few months, this isn't working. We're not making enough money anyway to be sustainable. Let's try something different.
Totally. When you are building your first company or second, third, number one is like, how do you acquire these kind of insights? Were you like, I know that you're a game player, Raleigh and Forte, like they're kind of like pivoting on top of the gaming part. How do you quickly acquire all these new information, digest them, and then make it used by your team, or how you want them to do? My number one question is sort of like, how do you absorb information? What kind of information do you get from? And then number two is like, I guess, how do you shape a strategy within this ecosystem?
The number one way that I learn is I read a lot. And so even starting in 2006, some really great VCs started blogging. And, these days you can read, Y Combinator and Paul Graham's essays, all the way to, Fred Wilson, and plenty of really interesting venture capital firms that really are very, very good. Either the firm has a blog, or the partners have a blog, and they write about things. And reading what a whole collective of other people are thinking about is incredibly helpful. Whether it's sort of trying to understand what's happening with NFTs, or understanding what's happening with new trends in Web3 or AI, or whatever it is. There's so many. There's usually, if it's an interesting enough market, there's a group of investors, there's a group of other entrepreneurs that are writing about it. And sometimes that may come as a tweet storm. These days it could be a full-on blog. But I think part of it is understanding who to follow, who to read, and I just try to digest as much information as I can, from people that I respect and feel like, I'm aligned with them in terms of my base philosophies of business and strategy. So I read a lot. And I think a lot of people talk about, this idea of, when to pivot. Do you have a good enough business? What are the right, indicators that you're on the right track? I think, some of these questions are they're very specific to particular companies and market segments. And I think it's, that nuance is important to figure out for a specific type of business. So I read a lot. And so, and then the second part I think is, I try to build a really good open dialogue with people on the team. And I think, a lot of times while other team members may not see as broadly as sort of the CEO, who can sort of rise above the day-to-day building of a work stream or building of a product to just kind of scan the market. But generally the team, I've always felt like the team, people on the team have good insights into, is the thing working or not? What's broken? What can we change? And again, there's never going to be somebody else that a founder CEO can turn to that will just hand you the information on a platter or the answer on a platter. But it's really just getting different little pieces of information and different pieces of the puzzle together, both internally and externally, and then making the best decisions that one can with multiple pieces of the puzzle.
Totally. So I'm curious, in terms of information diet, you mentioned a lot about like strategies or like, startup related, like VC related blogs. Do you read anything specifically in like, let's say, tokenization and stuff like that? Because I feel like you definitely have deep knowledge in the gaming aspect of things, like, or do you just read gaming blogs?
I actually don't read very much gaming blogs anymore. I think one of the interesting things that I discovered, having been on the inside of the gaming industry even, is that the best information people don't share
on a blog.
Yeah, I mean, they share on a blog, but you sort of get, you get like 50% of it. And then the other 50%, you have to sort of talk to certain people to really understand, what's going on. So I think, for example, as a CEO of Kabam, I knew there's a whole set of really valuable information that I had about the market that I never shared, publicly. I wrote some for LinkedIn and some other things. I never really shared what I thought was like the most valuable thing, partly because it was a competitive advantage, I think, to hold some of that information.
Not even on this podcast.
Well, I think, the thing that I very rarely talked about, publicly was exactly how do we think about designing for, the very top players, of a game in terms of both time spent as well as money spent. We had these like people way on the outlier we had a design for, and we never talked about that really. And I think, a lot of times conferences, industry conferences, as much as I think founders and CEOs shouldn't be spending every day of the month, traveling to a conference, it is worthwhile, I think, generally to connect with other people in the industry, a few times a year, because there are certain things that people share in person in small groups over a drink or a dinner that, just doesn't get shared, otherwise. And so I think it is helpful to go there. Other people, in every industry, for example, and I think in Web3, Vitalik, I started reading Vitalik when I first got into the industry, or even before I started. And I was just like, wow, this guy is so brilliant. And he writes about so many different things in such a deep way. And so he's just such a amazing resource to start with. My first thing for everyone who joins crypto Web3 is go read the Bitcoin white paper. It's actually not that long. I remember somebody telling me, a number of people telling me, hey, go read the Bitcoin white paper. I was like, I don't want to read that. It's too scary. I don't really, I'm not an academic. I don't know how to read white papers, but the Bitcoin white paper is actually very readable. It's only 8 pages. You can skip all the math if you really want to. And so just read the 6 pages of text. It's actually pretty straightforward. But I think that's incredibly solid. I think reading Vitalik, is another great place that I always point people to. And then people just jump off from there. I always, of course, point people to like the A16Z blog. They're always blogging about really interesting stuff, following, certain people in the industry like Kyle Samani or the Pantera folks. Different folks in the industry are writing, good stuff. Even if it's stuff that's a few years old, it's always great to start with a few of the originals, like Fred Urson, writes some great stuff as well. Brian Armstrong publishes, great thoughts on Twitter. So I think start with some of the industry luminaries, and then find your way, of course, as the internet does to link you to all sorts of things over time.
Totally. So I feel like I definitely learned a lot about like your mental model on like, about the trends, as well as like a lot of like big picture things. You mentioned about like either managing people or like, what the stuff that you read. I definitely feel like I took a lot of inspiration from this our conversation. And so like here are some like specific questions. What is your vision for the future of economics or creator economics? We see these big trends about like creators start monetizing heavily on themselves, right? Like they started like, Substacks, and then they become Substack millionaires. And then there's just like so many crazy, interesting things have been happening. What is the future of like how a creator can monetize themselves? And then, especially the ones that without like Joe Rogan level of following.
I think Lee Jin, was the one who popularized the 100 True Fans. And I really believe in that. And I think it's, the rough math is, how do you get 100 people somewhere in the world to pay you $1,000, for your work?
Mhm.
And I think that level of thinking is really illustrative because number one, you don't need Joe Rogan level of audience. You just need to figure out how do you obviously need to probably reach more than 100 people. And then as we talked about in gaming, it's sort of this weird concept of I or you or the average person may not spend $1,000 on one creator ourselves. So that mentality is a little bit hard. So it is weird to get into this mindset of how do I deliver something to one person that I could ask $1,000 for? I think that is absolutely going to be the future of creator monetization. It's not that so I think there's going to be two parts to creator monetization. One is going to be this 100 True Fans and this idea that how do you get somebody to pay $1,000+ for value? What is that value that you can create? How do you deliver it to? How do you find 100 people to deliver that value to, and really ask in return to get that level of payment for the value that you create? And then the second part of it is going to be more mass market. So it is going to be whether it's sponsors or advertisers or other means of sort of how do you monetize the other let's say 10,000 fans or audience that you have. And it's probably for those, it's less likely that those people will open up their wallets and give you 50 cents, but it's more likely that an advertiser will be willing to pay 50 cents, to get in front of those 10,000 people or however large the audience is. So, I think there's a lot of companies focused on either one or both of those elements, and I think that both of these things will come together to help create. I truly believe this for tens of millions of people, maybe hundreds of millions of people around the world. There'll be an opportunity to create digital monetization tools and platforms to help 100 million plus people make a living from this.
Totally. Let's say like when you first started your companies, how do you find that 100 customer? And how do you really vet them? Because I think if you start like a free group, people may join and then people may leave. And then you have to select the people who doesn't leave and then make them pay. I feel bad for like to ask money from my core supporters, although they can get value from being in the group. However, I still feel like, shouldn't you let the people who are really loyal to you, shouldn't you reward them? I understand that you can give them a token, but I guess I'm just out of curiosity, how do you like find these people, and then how do you like kind of nurture that relationship? I think any relationship with money component, it's kind of different than if they're just your fan, right? Like, I mean, I like Justin Timberlake or Justin Bieber, like I buy their CD, but like that relationship is not really two-way. Like they don't know me exist. If let's say I purchase like a podcasting course and I become friends with that teacher, I mean, it's interesting, but it's very different than like my friends who teach me something. And like, I guess like it's really different when money got involved. I'm curious, like, what do you think will be the future of that?
I think, again, this is probably creating multiple different tiers of value. And I think at the lowest tier, when you're sort of thinking about a very mass market audience, it probably is figuring out how do I deliver value to that audience. And there's some expectation set that this is the value that I'm delivering. Here's what's unique and different about my content or what I'm creating. And then this is going to be free. This is what I'm using to build my audience. And the way I monetize that average audience is sponsors or other things that really continue to offer something free and allows you to continue building an audience without asking for things to grow your audience. But then it's really thinking here for 100 people, what is the value that I can create for 100 people? Probably simpler to even start with. What is the value that I can create for one person or 10 people that they're willing to pay $1,000 for? I don't think anybody should feel bad if they don't know the answer to that question.
Mm.
But I think it is worthwhile to ask the question and really think about it and try things, that can work there. So we know there's going to be people who value experiences, some type of in-person or private, type of experience, one-on-one talk, whatever it may be. That stuff doesn't scale. But again, we're talking about how do you get to one person? How do you get to 10 people that are willing to pay you $1,000? And I think it's worthwhile saying, hey, well, I'm always going to deliver this amount of free value to everyone, but I'm going to start with one person or 10 people that I'm going to ask for, my time is valuable. I need to support myself. I need this amount of monetization, but I'm going to figure out how I deliver more than $1,000 of value, to that person. I think that's, it's a very hard question, right now in 2022. But I really believe that by the time 2030 comes around, there'll be more and more tools and insights and playbooks for creators to rely on to do that.
Totally. So like when Raleigh is like helping creators to tokenize themselves, besides creating some sort of like experience driven company, basically not all, but like a lot of NFT projects, the top projects, like what they do is there was a lot of experience that's similar to you go into amusement park or like you go into a concert or you go into like some sort of experience in life. So I guess like besides creating an event company, like how can a person authentically tokenize themselves or like, launching a podcast a week before when you're supposed to launch? Like, I think sure you are dropping the alpha there, but like, is there that much alpha for me to spend like $1,000 to buy a cartoon JPEG and then we can have breakfast once in a year? Like, what exactly can like a creator do to make their token worthwhile?
I wish there was a magic answer, to this. I think that right now there's things besides there's utility and benefits, whether that's, in person or digital. But I think the other area that people don't explore enough is status. I think status and recognition is something that, again, if you have a lot of money, you may care about. And this idea that I could spend $1,000, for example, and at the end of a podcast, there's 5 to 10 people that get recognized for, or one person that gets recognized for really supporting and being the biggest supporter in the last week, for a show that might be created. And I think that personal call out from you, could be worth, a lot to the right fan. And so I think I don't know the right answer, but I think it is just experimenting with it, because I think every creator, what every creator does is really valuable to, and that value is different to different people in the world. And so, we're talking about what is that 1, 10, 100 people in the world willing to pay $1,000 for? If that answer was easy, then we'd all be doing great. That's the multi-billion-dollar question in 2022 is what are those things that a creator can offer to a very small part of their audience that they're willing to pay a lot of money for. But I think the answer is not, I think what we've learned with media is the answer is not ask people to pay, $50, and try to get 10,000 people to pay you $50. That's really, really hard. The answer is much more likely get 100 people to pay $1,000 than it is to, get a modest amount of money from a lot of people.
Totally. In terms of building a product to the people, so like as you mentioned, like when you guys would study like all these like top gamers, you mentioned that like maybe some of the conversation just happening between like you and another expert in the industry or like your team member. How do you even know what you need to figure out? Like, I mean, I'm not a gamer, so like I wouldn't know how a gamer feel. I mean, I understand like if you want to create a company, you better know like why people are doing this. How do you figure out what's the right question to ask? Like, where is your intention coming from? And then number 2 is like, who do you ask? Or like, how do you find out the answer that's kind of true? Because people can lie, right? Like, I mean, I can go to the top podcasters and then be like, hey, like, can you tell me ABC? They're not gonna say what they think are true, right? Like, how do you get the true answer from people though?
Well, I think part of it is, I think part of any industry is building relationships. The first part is, can you be honest with yourself? Have you built a relationship with somebody else that they're willing to share some part of, what they are? And that probably requires, each of us to say, am I providing value? Am I providing the right information? to other people, whether they could benefit me or not. But it's just a good way of living to say, hey, I want to help everyone I can, especially if it doesn't really cost me, anything. I want to,
Yeah.
whether it's my time or a little bit of attention, how can I be as helpful to as many people as I can? Of course, the answer is always never, like, especially in the digital world, you can't help everyone that DMs you or sends you an email. But if you sort of manage your time correctly, how can you help as many people as one can? And so it is getting, it is going and investing time with certain people, and hopefully that blossoms into something that you're enjoying spending time with that person's enjoying spending time with you, and then some more honest conversation, can happen. But the reality is, I think a lot of what makes a great creator, part of it's luck, part of it is, did the algorithm favor you, for
Oh God.
on that platform. Some of these things are serendipitous. But I think, like what I'm really hopeful is that, right now in the last, couple of years, there's been a lot of focus from the market in general about these creator platforms, because there's more and more recognition that as we spend 8 hours, 10 hours, 12 hours a day, sometimes maybe more, on digital screens, that people are consuming content and things that other people are creating, and that people need to be able to make a livelihood from this. And generally, what generally follows, I remember in 2010, the general wisdom in gaming was, don't create a game for mobile devices. Nobody's going to spend money on an iPhone or on an Android phone for a game. But the reality is that money follows time and attention. And so, as the games and the hardware and the experience got better and better on iPhones, of course, now there's games making billions of dollars, on mobile devices. But going back to 2010, literally nobody thought you could make $1 billion from making mobile games, but everyone's just sort of accepts that as the reality today. And so I think as we think about kind of all the proliferation of digital platforms, digital content, people spending more and more time on digital creations, again, that really special relationship, that ability to develop that 100 true fans and to find a way to monetize and make a living. I think more and more, there's so many businesses and so many investors and so many creators that all want to figure this out. And I think we just need a little bit of time to do that. And part of me just very much believes that Web3 is going to be part of the answer to this.
Okay, so 3 questions. Sorry. Okay, can you really design a game that's like, because I feel like game is probably the most not predictable thing ever. Like, it's like, how do you even know what people will like? I just feel like gaming is like just hard. It's next level. And then number 2 is like, how do you build a good platform? Like, do you build a good product first, so like attracting people to use it, or do you get like the money first?
Let me tell you one secret of gaming.
Okay, thank you.
Another secret that I think is probably not talked about very much. Of course, you could create a great game any number of ways, but if you really want to create, kind of a repeatable formula for if you're going to be a company that's going to make lots and lots of games, and you want some sort of formula to give yourself the best chance at being repeatable. The best thing that I've found is, this is from other game makers that have been at this for even longer than I have, is you have a third, a third, a third. It's the rule of 3/3. The first third is, take something, a third of your game experience should feel exactly like something else that's working, that's successful. And so that's like important. Like, say a third of this thing just is like this other thing that's really, really successful, and it's good, and it's successful for a reason, and I've got good taste, and I know that they've got other great things, and so I'm just going to do exactly that thing. The second third is to make a little bit of an improvement. It should still feel very recognizable, but another third of your game should feel like, oh, it's kind of like this other thing, but a little different, and it's like different and a little bit hopefully better. But it should be very, very recognizable, but different in terms of the approach. And then the last third is, how do you make a third of your game feel new and exciting and delightful, to somebody? And I think, but if you zoom out on that, it really means that 2/3 or the large majority of your game is you're borrowing from other, things, that are out there. And I think that, again, not every game that we created, followed this formula. I think that was always a very, very helpful way to build a portfolio, or just to really think, from a business perspective, how do I try to make repeatable, this process that just has a lot of unknowns, attached to it. And the reality is, whether, any form of content, whether it's a game or a podcast or, a short form video, it's very hard to be 100%, new, which is why I think of like Elon Musk or some other people who are just so far out there, just being so brilliant, about this stuff.
Yeah.
And that's not me, right?
It's hard to achieve, though. Yeah,
it's hard to achieve. I know I'm not that great, right? So
I think you're pretty great, like $1 billion. Okay, like I mean, I would settle for that. Okay,
you can really take 2/3 of borrow from others, right? And you hear mathematicians or you hear other great people, they always talk about standing on the shoulder of giants. It's like, yeah, like I achieved this, but I was really standing on this other person's work who did the massive, bulk of it. I think that's really true for so many different things where, it's really hard again to, I think it's easy to say, hey, that person or that company is doing something really great. I'm going to borrow heavily from that, but I'm going to still add 1/3 of it is going to be my own take. I think that's a reasonable formula for success.
The tricky part is like which part to borrow. Like
right.
I see so many people just borrowing the most obvious stuff. Like literally yesterday, I saw someone's like YouTube channel looks exactly like Lex Fridman. And then I'm like, is this even borrowing? Because this
or yeah, right, or is it stealing? Yeah, I don't know. That's everyone's own, sort of interpretation of it. But I felt like that was a really helpful way to narrow the creative focus on saying, hey, you know what? Like the other way to think about it is that you can't have the entire canvas be creative. You have to say, here's the boundaries, and then here's just the third, and I always felt like 1/3 was a really helpful, amount, because it was like not so small that it's like, oh, I'm going to make a 5%, like little thing and everything else I'm going to steal. But it's also not so much that you're like, oh, I'm going to take the majority of what I do and just make it like de novo crazy. It's like 1/3. 1/3 of it should be really cool and different. And then the 2/3 of it should be, can be something that you're basically borrowing from other people that you admire.
Who do you focus first? Like, do you focus on the 2% people, or do you focus on like the 100% people and then to attract the 2% people, or the 2% people are somewhere else?
Ooh, for content, I think it is your mathematics are at play. So it is helpful to try to attract the 100 people, and then within the 100 people, find the 2 that are willing to, be great customers.
Totally. When you were designing like the NFT and gaming, do you think of tokenomics first, or do you think about the economic part first, or do you think about it last after you attract enough user and people onto the platform, and then you think about how to make money?
Yeah, so in Web3, it is important to start with the economics, because the economics are the thing that's not well understood. And so again, not for everything, but I generally believe, in my approach, starting with the economics is helpful. I think there's a lot of projects that do not think about the economics at all. They just try to build something really useful first. And I think because of, my background and just natural interest and passion, I'm like, what, the economics of a new business model is part of what makes Web3 so exciting. And if it was all figured out, then if the whole business and economics were all figured out, then this wouldn't be that interesting anymore. I think of, this stage of Web3, and the reason why it's challenging and there's no clear models yet, and is this thing ever going to work? That's exactly the right time to dive into the hardest part. And I think the hardest part right now, if we all look at Web3, it's like nobody's really figured out the economics. We all see little bits and pieces of things kind of working, but it's not working at a very large scale yet. And I think just like the gaming industry, when the early days of mobile gaming was coming out and people were like, oh, you can't make any money on these games. Well, that was exactly the right time to be pioneering and innovating and trying new things. And, in 2022, monetization in mobile games is kind of figured out. So it's just much, much harder to build a new business in 2022 in the gaming industry. But in 2012, it was a great time to be trying new things when everyone was saying, oh, you can't really make that much money on mobile gaming. Well, that was exactly the right time to figure it out.
Okay, so 2 questions. Number one is like, is this really like just a numbers game? Like after you try like 1,000 times and then like one time will hit, or like, is this more like the 1% rules, like, which I personally prefer the 1% rule as like, each time, like each episode you improve like 1%. Do you gradually come to a conclusion after you try really, really hard each time? Or like, do you just rapidly trying each time and then one time will just land?
I think both approaches are necessary. I generally think a quarter is a pretty good cadence. For example, like there's just a rough rule of thumb. A quarter is a good cadence to really try a major improvement. And to say, you know what, I'm going to try something really different. And so I could maybe do 3 or 4 of these a year where I try something really different. And it's going to be hard, and it may not, and it's probably also, has a high chance of failure, of not really working potentially. And then I think the rest of the time, you're trying to make the 1% improvement and say, okay, how do I make this thing 1% better, 1% better? I think if you only focus on the 1%, you're going to never try, the big things that could really dramatically make a step function change. And in other times that, you can't always be shooting for the moon. You really just need to, make it a little bit better, make it a little bit better, make it a little bit better. And I think the art is how do you do a little bit of both of them.
Okay, just hop into the 1-minute fire round for you. So number one question, what's your favorite book?
The best book I've read this year is probably Seven Eves, the science fiction book about what would happen if the moon, crashed into the earth, essentially. So it's a really thought-provoking book and highly recommend it.
Okay, totally will check it out. Who made the biggest impact in your career?
I think there's 2 people. Maha Ibrahim over at Canaan Partners. She was a great mentor when I was trying to figure out how to be a VC. How do I think about new businesses? So she really helped me think about business in a new way. And then I think Michael Brown, who was my first CEO coach, really helped me think about what does it mean to be a founder? What does it mean to be a CEO? He was the one who came up with focus on the 3 things that nobody else can do. Make sure you do those things well.
Totally. Who would you invite to your dinner party?
These days, I would probably think about a Web3 dinner party. And so I would invite Roham over at Flow. I always think he's doing interesting stuff. I think the Starkware guys are just brilliant. So I would invite him. Of course, I would invite Vitalik, who I'm probably one of the, just a huge Vitalik fanboy. And I would probably invite, Mike Novogratz, because he's just really entertaining.
Where can we find you outside of work?
I love playing tennis. So I'm really bad at playing at tennis, but I really enjoy getting out there and being active. I love hiking with my family. So I have 2 young daughters and a wife, and we all enjoy the outdoors. So probably those 2 things.
Awesome. Thank you so much, Kevin, for coming on the show today.
Yeah, thank you for having me.
Thank you for listening to this week's episode. If you enjoyed today's episode, please hit the subscribe button so you don't miss out. Have a wonderful day.